Good evening, traders. As I said on the announcements channel, I did a paper trading just for myself to check the ICT concept, plus also the delta zones. To be honest, just because my kid is already sleeping and I wanted to check what is happening right now in the market. Of course, any advice to look for setups in that time as the end of the New York session, it's risky. There's not so much volume, but just as an exercise, I found some setup, and without any live execution, I just marked some areas and was watching the price. So let's analyze. First of all, I want to show you that always when you see the imbalance on top of the candle or at the bottom, like here in the top, also here, yes, that this means troubles. This is a very big sign of market reversal. So even if someone was looking for a sell from my marked supply zone at the potential area of sell limit orders, if you were in the trade and you see that in the bottom of the wick there's imbalance, I would close the trade, because that could be the candle before could be only filling the fair value gap and also taking liquidity to break the zone. Take a look how long price was hanging below the supply and also inside. And then when happened this, I would reclose with small profit, I don't know, like 9 pips or something like this, if you entered from the volume spike. So the lesson to remember, imbalances in the wicks are troubles. Yes, this is the sign of reversal. Not always, but most of time. So be aware if you are in the trade. Let's check even on the M1 how it looks like in this supply. That was very juicy entry. Yes, it was indeed absorption and then break of structure to look for an entry. But if something like this is happening, I would really jump out of the trade. So this is just kind of small tip. Yes, if you see imbalance in the wick, go out. Yes, do not continue the trade with a hope of reversal or break of this imbalance. Even you see, yes, this is so clean. Here all these imbalances on wicks, here also, here and here, or even here. Yes, this is the dangerous, the biggest opposite side of the market joined and will continue the opposite move. But coming back to the topic about marking the zones, I'm looking for anomalies. Yes, I like this word, anomaly, and I like that one candle because it has pretty big negative delta, and the wick, this is the rejection candle. So the question is, does the move continue or not? It moved further up. Yes, so this is interesting candle to mark as a potential zone, like this one. Yes, so negative delta on M5, but price didn't continue the move but went up. So I have my zone on M5. Then let's switch to the M1 to see what happened exactly here. So if I have marked my zone with negative delta but price going up, I want to see where the buys started, in which candle I can see the positive delta in this case. You see this one candle, it's a bearish candle, but activated some buys. Yes, it's very big buy, a positive delta, and we call this shift on delta from very high negative to the big positive. So here, that one candle is my area of interest. I just want to have this perfectly horizontal. Okay. And then I am analyzing what happened before. Take a look on this equal lows. This is support. Yes, and was it taken? Yes, it was taken here and then price rejected. With another view by trend lines, I don't use it personally, but there is also logic here. By marking trend like this, oh, it's not so perfect, but back to the logic, like this. We have rejections here, kind of manipulation, and then still price rejecting and break. So probably here the retail traders were looking for a sell, but price went up. This move here, just this part, is a liquidity grab. Yes, because the trend line on the bullish wave is also a support. Personally, I prefer to use support as a horizontal lines, as I marked previously, but the bullish trend line is also a support, same as on the bearish move, bearish trend. The trend line is like resistance. So here it was broken and beautiful manipulation in that part. So that was the liquidity grab, also nicely confirmed with the M5 delta that here we had in this part activation of buy limit orders to move the price up. So if this move is a manipulation, is a liquidity grab from even horizontal support or the trend line, we can say really truly that that was liquidity, taking the liquidity. So with the ICT concept, that move is a bullish, very safe wave. Even by watching for our supply, that level that was taken, yes, this supply here with this leg out was taken by even by this small top. So with taking liquidity from the bottom and breaking the structure by this, for me this is confirmation that the buyers in this whole wave were stronger. So what am I doing? With the ICT concept, I am measuring this whole wave from the bottom to the top. And I have something like this. If I want to join the buyers, I am looking for a discount price, so in the lower part of this wave, because the top part is a premium price to look for a sell. So if I have my demand based on delta, yes, the negative delta which didn't continue the move down, and I found where the positive delta began the move, the bullish move as my baseline. I am looking for decreasing volume. Yes, with all our logic, decreasing volume on a key level to join the move. So we have really nice criteria. Bullish wave which broke the structure, demand based on also manipulation and taking all the liquidity from the trend line and the equal lows. So I am waiting for low volume on my to find my entry. So to not make any distractions, I switch to see the volume bars only, because I have already everything set. Yes, based on the bid and ask. So price is going to my key level, it's still high volume here, and then boom, drop of the volume. But in this case I wouldn't enter, because just before the low volume here is bearish imbalance. So the low volume could be a potential setup for a sell to continue the bearish move, yes, because price lost volume also in this imbalance. So we need to wait to break of it. Here is also another imbalance. So next move broke both imbalances. So that could be the sign that sellers are weak, that the buyers are really preparing for the main move. So now once again I'm watching the volume, and take a look what is happening with volume. Every one candle in this 3 minutes has decreasing volume, lower, 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 and the last one tapped perfectly our key level, where previously here the buyers started their move, yes, to break the structure. So we have everything: broken bearish imbalances, price decreased the volume on key level where previously was the start. So I can join the market, but how? But when? At the closure of the candle. Please always remember that. Please wait to the end. It's very, very important. That was the bullish candle. So I would enter, and I entered in my paper trading exactly here at the closure of the candle. ICT teachings advise to set the stop loss below the beginning of the wave. So in that case, that would be very big stop loss, set as, for example, 14 pips. It's a lot, I know, but this is just an example. I would never ever trade such a late time. Also, to confirm why to set such a big stop loss is fact of this imbalance here. So just to cover, yes, maybe price can make some tricky move and also go deeper to fill that imbalance before continue the bullish wave. But our key level is also important. Yes, this is based on what I tested multiple times already. So it's safe to reuse the stop loss. During the day, usually it is like between 7 to 10 pips. With current market conditions, it is still possible to catch 20-25 pips to get 1 to the 2 or 1 to the 3 risk to reward trade. So still good, because the market is moving faster. Yes, we still can see 15 pips candles on M1. Even today, the biggest candles I think I found was like 27 pips. Yeah, 28 pips. So crazy. Yeah, 1 minute candle, 27 or 28 pips. So that's why we use bigger stop loss. So okay, we are waiting for a setup. We found a correct candle. We know that 14 pips is a safe SL, but then we need to check in a few seconds where is the safe TP to know if this is worth the risk, yes, all the game. So based on the ICT concept and the fair value gaps, I would mark that one. Yeah, this area from week to the week on that one candle. Then what I need to do, I need to confirm on the footprint chart if here is really imbalance, because this is blind. Yes, we don't see anything. This is just naked candles. I want to see if here truly is the imbalance. So I know that this candle is 21:07, 7 past 9, sorry. And this is that candle. Boom, this one. It's a cheesy candle. You can see a lot of imbalances. So it can be also broken, potentially broken, to see the price even higher. But I want to only confirm if on the marked area by me between this week and this, between these two candles, is truly imbalance. But I see, yes, it is 7 to 0, 4 to 0. For my criteria, I need to see always imbalance at least with 15. So here is lower, but with overall concept, this is correct, yes. Just my own criteria need to see bigger imbalance than 7 or just 4, yes. This is very, very tiny. But probably this is due to the time. This is almost the end of the new session, so lower volume, smaller moves. But it's confirmed, yes, on the footprint it's confirmed that really between these two candles it is a fair value gap with imbalance. So I know that is my potential safe take profit. So it is like maybe 23 pips or 22 to the 14. Small risk to reward, but it could still give 1.5% up if you're risking 1%. For me personally, with the big account, it could be worth, but I would really never ever trade such a late time because the liquidity is very, the volatility is very, very low. But this is just testing the theory. So that could be worth, yes, risking 1% to get 1.5. Why not? This is just a test. So if I would enter here after confirmation that volume is going down, already the bears were broken, I am ready, yes, I am entering here. And after entry, I am no more looking on the ask bid to not be confused, to not analyze too much. I only want to see the volume because we are the volume traders. Our trades are based on volume. If the volume is going down, it's a sign of weaknesses and better to leave the market, etc. So by entry here, I am still waiting, and then you can take a look also by every single day that 21:59 it's usually the last big order on New York. It's kind of rule, I don't know why, but here every single day the volume is very high as someone is placing his last big order. So when he plays this is another liquidity grab for me. Cheesy candle, so nothing to be scared that I would be in the loss. Yes, because you have 3 imbalances. So with our view and beliefs that cheesy candles are for manipulation and to see them broken, I was still continuing my position. Yes, because price was still in the discount zone on the bottom 50% of the whole wave. When the prices started to being above the 50%, it was a good sign to move the stop loss to the break even or to anywhere you want. It's just to protect your capital, to not finish as a loss, because when price is above the 50%, this is the premium area. Premium area is for sellers only. So please never ever try to join buyers on the premium area. Yes, because that brings the risk that this is interesting zone for sellers. So we should only look for a buys in the bottom 50%, yes, as a discount. Discount means low price, good to buy. Premium means high price, so enough to sell. So when price is on above the 50%, do not think about joining the buyers and move your stop loss to protect your capital, because every single moment in this area sellers can attack heavily. So in that case, they were more interesting in this fair value gap, as you can see, between this and this week, or like that, and they started to sell. So for me it was break even, but overall logic was, in my opinion, very correct, as I was looking for a buy and a discount with decreasing volume after showing that the bears are weak, and then I just moved my stop loss to profit when price was already on the premium area. So this is how the ICT is working. He's trading a bit blind. Yes, he's not showing, not confirming his fair value gaps with the footprint chart. But always be aware that when price is in the premium and we are buying, better protect your capital, because all the time here, maybe even here higher, yes, because that was a cheesy candle, the sellers are ready. So do not jump into the buy above the 50% of your bullish wave you marked. So this is how the concept is working. I will record longer video, maybe not, as I said, 30-45 minutes, but maybe 1 hour or longer, with more setups, just to show you how to find the logic on the chart. So big apologize that this is not a winning trade, but the whole logic really was here. Of course, in my opinion, I would take this trade if that would be in the London time, but finishing the break-even is also a good sign that you understand what is going on. Yes, we cannot believe that the price will reverse if it's going back to your start point. Protect your capital with logic. If price is in the discount premium and it's turning back, it's not a good sign. Yes, it's really not a good sign. Just let's check. I didn't check this before. If he was really truly imbalanced, because for some reason sellers were activated here. So let's see the 2111. Oh, it was so small imbalance. Yes, 6 to the 0, 1 to the 0, but also big sell stop orders. Why sell stop orders? Because we see the big ask, but price continue move down. So these weren't the buy market execution orders, but sell stop orders, because price went down. So price just really nicely tapped this and continued. But my safety P was set, in my opinion, safely, because I would never really also set my take profit just on the 50% area. Maybe it's the safest way, yeah, with no risk. Okay, I am buying here and aiming just to the 50%, because all above is risky. This can be also your criteria to find your safe TP. I would really completely agree. But for me, more important area was here, yes, because he was the liquidity grab. He took all these highs, in my opinion, is also resistance level, and he was the start of the bearish wave. So if I would be looking not for buys but for sells, I would mark this to here. Yes, this is my bearish wave, and price didn't came above, yes, to the premium. So that if I would be looking for a sell, I would be sell only from that area. So this is why I set here my safety P. Yes, because that sell were activated on the discount, not on the premium. So always try to look also for the opposite side of the market. I hope that this is really logical, and do not set your take profit levels like 50 pips from entry, 70, 80 or 100. No greed, really. Even 1.5 or 2% a day will change your trading completely. If you use 10 pips, as I now, aiming for 20 pips in these market conditions should be really achievable, and this is the 2%. If you want to get the funded account, it's a matter of few days to finish first phase, then second phase, and then imagine that with 100k account you can make 2000 a day by risking, for example, 900. As I risk, I don't risk whole percent, but 0.9% just to cover the fees. And imagine that you can make 1,500 or 2,000 a day by simply using no greed strategy. Yes, I admit that I was looking for a high reward trades previously, like 1 to the 5, 1 to the 7, with 3 pips stop loss. But I think that now I am at the part of my journey that I am more mature. I trade a bigger account, and I don't want to make any show off anymore. I am just happy when I see at least 1,000 a day in my account, because then I can trade 1 time a week, 2 times a week to change the life. Especially that I had really bad month in my trading in my whole career. I'm profitable over 2 years, I'm educated 2 years, and it was worst month. I just was confused almost all the time, and even that I was taking trades. So now my approach changed, my goals changed. I want to see maximum 1 to 2 a day, because it can really change the life. It can be more difficult maybe if you have 100 euros account, because that means that you can aim for 2 euros a day. But by investing 300 or 500 for the funded account, your life can change in 2 months, really. Because 10 days is for 2 phases. If you can really find good setups. So 5 days for phase 1, 5 days for second phase, which is even with lower goal. Like by MFF, it's just 5%. The first phase is 8%, and then you need to trade 10 days for a whole month to get a first payout after 30 days. Amazing, yes, it can really change your life. So do not be greedy, please. This is the key. I changed really a lot in my trading. I was very aggressive previously, especially before the summer holidays, with 3 pips getting 21. Oh yeah, it was probably show off. I was in the Instagram game, fighting with gurus. It was stupid. I changed, and I want to also see your change, your mature approach to not fight against the market, but really be smart. Imagine that this is for your future, not to show other people your results, but to change your future and to really get a good trade. And like waiting up to 2 hours for a setup, trade take usually half hour, and then you can be done before the noon. Sorry. This is my goal, to see you all here. So that's why we will change the rules on the Discord in the end of the year. All of you, all our friends, all our support will have the free membership, no more payments, we promise, and I hope that we can be friends for a long years. Thank you for watching, guys. It's half hour. I thought it could be 10 minutes. And I wish you all very good weekend, and Saturday night I will record more in-depth video with more setups.